after calculating the three financial statements, we can now start the financial statement analysis, and these are the ratios. Here we identify 10 ratios. The first is the gross profit ratio, which is the gross profit over sales. We have the cost of goods sold 60%, hence the gross profit will become 40% fixed year over year. Okay. The net profit is the net profit over sales. Net profit is increasing year over year. Okay, in TechnoCloud, since the sales is increasing, then the net profit also increase. Also, we can reach to an increase in the net profit ratio by decreasing the expenses. The current ratio helps us to understand the liquidity position of the company, whether the company can pay the debt to creditor within a year or not. We can see here the current ratio is 3.44, 16.9, 4.7. It's always more than 1, which is good. The fixed assets turnover ratio, it's the fixed assets over sales. We can see it is 1.5, 2.1, 3.2, always more than 1, which means the fixed assets are greater than the sales, which is good. Then debit equity ratio. The debit equity helps us to know how much debit comparing to the equity, and the value is more than 1, sorry, less than 1, which is good. The equity multiplier, which is how much total equity in the business, and again the factors are satisfactory. The inventory turnover ratio. The inventory turnover ratio is how much days are the selling of our inventory, and how many days we are keeping the inventory in our warehouse. Here it is 1.5. It is good, acceptable for such type of business. Sales to working capital ratio. This is a ratio measuring the efficiency of the company working capital utilization in order to generate the certain level of sales. Again, the ratios are good. The high level of sales to working capital ratio indicates a good efficiency. 9, debit ratio. This is the total debt to the total assets. There is no risk, as we can see here. It is below 0.3, 0.3, or 0.1, which means there is no risk that the business will not generate enough cash to service its debt. Return on assets, this is the net income over the average total of assets, and it shows the percentage of how profitable a company's assets are in generating revenue.